I kind of feel like we're building, and some say we've got to wait for the halving for it to happen. I don't know. It's unclear to me that that's the case, but I mean, it strikes me that the next ramp, if we kind of build a base between 20 and 30, I mean, it was 15 or 16 briefly, but we kind of call the base 20 or 30, and the ramps tend to be kind of 5 to 6x, sometimes more. So, I mean, Kaiser thinks it's going to 230. It could. I mean, my sense is that it's a no-brainer on the next ramp to get to 100, 120, and maybe to 170 or 180. And, I mean, will I sell maybe just a couple of coins at that level to have a little extra cash? Maybe, and pay the tax. I mean, but, I'm not sure. I mean, I have to wait and see.
It's a no-brainer that Bitcoin's price will be heading for at least an all-time high of between $100,000 and $180,000 in this cycle. This is the latest prediction out from Larry Lepard. Recently, Larry shared some insights into why he believes Bitcoin's price is set to skyrocket. Using a simple analogy, he called Bitcoin the fastest horse in the monetary debasement race. He expressed confidence in Bitcoin's increasing safety as an investment and discussed the cyclical nature of its price movements. Lepard also highlighted Bitcoin's unique feature of a limited supply compared to the endless printing of traditional money. Moreover, he shared his vision of a future where traditional currencies fail, emphasizing Bitcoin's potential to fill the void. Make sure to stick around to the end of the video where Larry explained how the upcoming halving will impact Bitcoin's price. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's why Larry Lepard thinks Bitcoin's price will explode to well over $200,000 in the coming months.
Imagine we all woke up one morning and gold was now $10,000 an ounce and Bitcoin was at $200,000 a coin, right? I mean, imagine that happened pretty quickly. Don't you think the panic would be, some people say, well, it's too high, it's going to come back down. Others might say, no, that 200 grand is cheap. That thing's going to 2 million. Give me some of that. And then, you see what I'm saying? And by the way, bonds would be cratering, interest rates would be going up, stocks would be cratering, and you get a mass event of Gresham's law. Get me out of this burning theater that's called fiat. We're all in there. The price of Bitcoin and gold are yelling, fire, fire, fire. They can't stop printing it. And we're all going, oh shit. I got any savings? I got to get them out of this shit because it's going to become worthless. And that's what happens. That's how it happened in Venezuela. That's how it happened in Weimar. That's how it happens everywhere. So, that, in my opinion, that's in our future. Sadly, that's in our future. Unless we do a controlled monetary reset, something akin to what Roosevelt did in the 30s. I mean, he didn't do it perfectly, and I'm sure we would fuck it up too. But but the point is, there is, they could truncate that, seeing that coming. Somebody, and in fact, there are a lot of us who believe and argue that they may try to truncate that with CBDCs, right? Yeah. Look, I mean, Paul Tudor Jones said it, and I believe it. Bitcoin is the fastest horse in the monetary debasement race. Okay, it's gonna crush gold. It's gonna crush houses. It's gonna crush. But give me the choice: stocks, bonds, gold, a house, Bitcoin. Well, okay, Bitcoin's, in my opinion, the best. Gold's probably the second best. The house is probably the third best. Bonds are probably the worst, and stocks are somewhere in the middle. I mean, in hyperinflation, stocks tend to go up a lot, but not in nominal terms, not in real terms. Mm-hmm. So it's you can just see it and feel it coming, but you get these waves, and this is what tricks people too. I mean, we had this incredible wave. And I mean, look, at the end of 2021, I mean, I thought we were entering a crack-up boom. I mean, there were bidding wars for houses. Bitcoin was at 68,000 or, whatever. I mean, stocks were high, bonds were high. I mean, I was like, holy shit, this is it. It's happening right here, right now. Well, the Federal Reserve probably realized that too. And when Bitcoin, that's the other thing. When Bitcoin went from the 5 to 10 range in the
5 to 10,000, yeah.
Yeah, 5 to 10,000 range in the 20-ish area, and it went to 50 or 55. I mean, you think alarm bells weren't going off in every central bank in the world? I mean, they were looking at each other going, oh, fuck. This is really a problem. Because they'd managed to kill. Gold was always the canary in the coal mine.
Yeah, your gold, gold, I'd love to talk about that difference.
Gold
Go ahead.
was always the canary in the coal mine that warned of monetary debasement and inflation, and that's why Gibson's paradox, Robert Rubin, Bill Clinton, James Carville, all those guys, they realized they had to print paper gold to hold the gold price down if they wanted to print a lot of money and grow the economy, and they did it. And so they in effect, the fire alarm of gold got suppressed. And there's a ton of data to support this. Is not a debatable fact. There's 100 gold is a big game of musical chairs. There are 100 paper claims for every ounce of gold that exists in the world. And a lot of those paper claims are in an ETF or somebody who thinks they own gold, but when they say, give me the ounces, they're not there, okay? And so, we could wake up one day and the COMEX and all these different paper versions of gold, they say, sorry, force majeure, we're cash settling. The price on Friday was $2,500 an ounce. We'll send you $2,500. And we would all wait for the physical market to open up, and the physical market might open up and the first price might be $20,000 an ounce, right? I mean, basically the paper market just failed, okay? And so, Bitcoin came along and it snuck up on them and they didn't pay attention, they didn't kill it. And, as I think it was Luke Gromen who coined the phrase so eloquently, he said, this is the only monetary fire alarm that was working, that was actually telling people how much inflation there was out there, right? And it's really great. And I mean, because, again, going from 5 or 10,000 to 50,000 in less than a year and a half, I guess it was, something like that. I mean, that's pretty stunning. It's the best performing financial asset ever in the history of mankind. It also has the highest Sharpe ratio, which is an adjustment. You can argue whether volatility is the right measure of risk in the Sharpe ratio, but it's really a very unique and interesting phenomena. And I think the average human being has a hard time getting their head around what an invention immutable digital scarcity is. I mean, we've got money that's broken, that's losing its value all the time, constantly. And then we've got this alternative form of money that's gaining in value all the time, constantly. Humans aren't dumb. I mean, they may be slow. It takes time for the word to spread, but eventually you say, hey, I don't want to hold any of that stuff or I get screwed. I mean, give me some of that stuff. And just, we will, before we know it, we will be on a Bitcoin standard. Nobody will accept fiat currency anymore. Our grandkids will be saying, can you believe those dumb fucks let a Federal Reserve and a bunch of people set the most important price in the world, which is the time value of money? I mean, the time value of money drives every economic decision. Every economist will agree with it. Even the Keynesians will agree with that. It drives every economic decision. And I think most Keynesians, if you said to them, hey, when the Politburo, and I remember this because I was a kid and this happened a lot, the Politburo used to set the price of wheat. And, Russia either had a wheat, excess or a wheat shortage, all based on whether the Politburo got it right, okay? And so they were trying to mess with the market. They were trying to control the free market. And of course, if you let the price fluctuate, guess what? The right amount of wheat gets grown. And so, that's what's going on with the money, right? We're sitting here saying, we should have an interest rate like this. Okay, well then, great. We're going to overinvest in stupid shit and build, all this house, and that bubble's going to collapse, and it leads to, as Austrians say, it leads to malinvestment, right? And so, the way the economy would work best is to let the price of money, the interest rate naturally is meant to be the price at which somebody who's saving capital is willing to lend to somebody who's employing capital to build or produce something, and the, so if there's more savings, the rate goes down, and if there, but and the people who are, the saver is sitting there saying, would I rather spend this now or would I rather get this rate of interest? And the borrower is saying, is the project I'm trying to build give me enough return that it justifies paying this rate of interest? And when that is naturally allowed to occur, then there's a much higher likelihood that you get the right level of development in the right places and the right projects get approved. If you artificially take the interest rate and suppress it down to 0% for a long period of time, and everyone thinks they can borrow for free, they're like, well, what the hell? I'll borrow for free. I mean, Silicon Valley Bank, hey, we can buy 30-year 1% bonds. We'll be fine. Well, no, you won't, because when the interest rates go up, you're going to take a huge loss. The signs that this system is coming apart are just they're manifest. They're absolutely manifest. And whether it be COVID or the reaction to COVID, whatever it might be, I mean, we have got an out of control monetary policy, and it's there's a video, I'm sure most of you saw it. I saw it in high school physics class of that the famous bridge out in Seattle.
Oh, the one that collapsed.
That start and you get these sine waves, and they just get more and more extreme, and it's kind of it goes to critical states, right? The swings get larger and larger and more until the whole thing just blows up. And I actually think that model is somewhat apt as you look at our monetary system right now. I mean, COVID, we had the repo blowout, and COVID came along, and we had to print more money than we've ever printed before in massive quantities. And they said there'd be no inflation, but of course there was enormous inflation, right? And so they looked at that and they panicked and they said, okay, we got this enormous inflation. We got to slam on the brakes so friggin' hard, it's out of control. And so now we're going down the other side of that curve. But this, if it continues, this is going to look like the 30s, because people are going to be going bankrupt left and right as they lose their jobs and the economy is strangled by the high cost of capital. And at that point in time, the political narrative will change. They'll be, well, inflation's not a problem anymore, but the economy's falling apart. We got to print some more money. Then we're going to go up the other slope, and gasoline will be $10 a gallon, right? I might argue we're maybe kind of at the 5 or 10% level, in terms of Bitcoin or adoption of sound money, if you kind of lump gold in there, because it's kind of to me, a gold bug is just a pre-Bitcoiner. They understand the issue. They're trying to prevent themselves from getting hurt by monetary debasement. They just haven't gotten fully comfortable with this newfangled thing, And so take them and take Bitcoiners and call them the sound money camp. I think you probably got 10% of the country.
Really, that just seems really high to me.
No, I think you do. I really do.
Wow. Okay.
Because you got you might be right in terms of dollars. Maybe I'm talking in terms of people, but
oh, okay.
You got there's 10 or 11 trillion dollars of gold in the world, but a lot of it's in central bank vaults or in museums. The tradable piece is 2 or 3, 4 trillion. Bitcoin is what, 600 billion now, roughly.
Yeah, 5 to 600 billion
600
market cap.
Market cap today. I mean, in total financial assets are 400 billion today. So 10% is 40. So no, you're not on a dollar basis. You're not there. But I would think that maybe we're at kind of the 5 or 10% penetration of people. Now, maybe I'm wrong on that. Maybe it's lower, but I'm sure you know where I'm going here. I'm going with Gladwell's theory, which is when the number of years it takes you to get to 10%, same number of years you get to 90%. Once you're and so we're in some part of the inflection curve where I don't really know, but I would think that we're going to get on that steep slope in the next 2 or 3 years. I mean, I think. I saw how many people came around this. I mean, I saw people who were in the 17 ramp. I saw people who were in the, and I know how many people came around. I know the calls I get, the interest level I get, people I get, I had people who were incredibly skeptical, and I just said, get off zero. Just, once they get off zero and they start to read about it, think about it, and they go, Jesus, and even if it's not doing particularly well, they're kind of like, oh yeah, I think I get this now, and so they buy more. So I guess my point is that. We're pretty close in my opinion, and I think with the next swing here, I don't think it's hyper-Bitcoinization on the next swing, but I do think...
Me either,
yeah. But people, that's the other thing. People are generally speaking pretty good at pattern recognition. This thing's ramped and dumped a bunch of times. It ramps from $1 to 10, you can go back and look at them all, right? It went to 100, went to 1,000, went to, and off of each of those ramps comes back down 78%. It was the 17,000 ramp, came back down. Then there was the, 20. It's each time. And so, my gut is the next ramp is, as I said earlier, the next ramp is 150. Call it as a mean number, and then it probably corrects back to 40 as the new low off of that one. But then 40 builds a base, and then the 40 goes to 450 or 500,000. And then that correct. You know what I'm saying?
See, there, I think you're too bearish, because right now we're in the 30s. What if 40 for next?
Well, but we were in the 30s, but the low on this time was 15.
That's true.
So but maybe, yeah. It's, and I have noticed the drawdowns haven't been as large, and the volatility is decreasing. It's ever so subtle. I've looked at the volatility and the vol numbers, but it is decreasing over time, and so. As it becomes, Lindy effect more widely adopted, the volatility should go down, and it will go down. But, to where we go, so this ramp, in my opinion, probably occurs, late this year, sometime next year, at the latest in 2025. And we correct, and assuming the fiat system doesn't blow apart. I think the thing you always have to consider is the possibility that the government really blows it, and then the next ramp is.
So there's Larry Lepard with his unique insights into Bitcoin's future trajectory. His analogy of Bitcoin as the frontrunner in a race against depreciating traditional currencies resonates with many. As he emphasizes the importance of wider understanding and adoption of Bitcoin, Lepard paints a picture of a future where digital currencies revolutionize our financial landscape. With Bitcoin poised to reshape how we perceive and utilize money, Lepard's perspective serves as a guiding light for those navigating the ever-evolving world of cryptocurrency. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.